The Rogers family challenges really are excruciatingly painful to read in the daily press. But beyond that, there's a lot said about the way in which they control a company through dual class shares. And there certainly is an opportunity for abuse. If you own 97.5% of the votes, you do what you want. But equally, there are very good reasons for there to be dual class shares. And today, some 35% of all new listings are coming to the market with dual class shares. So I guess if you're an asset manager and you don't like them, don't buy them. It's very simple. The sort of the Wall Street walk in reverse. But the reason that dual class shares have come back, and they've been around since 1925, the Dodge brothers, remember the Dodge car? The Dodge brothers brought dual class shares to the New York Stock Exchange back in 1925. They own 7% of the company and controlled 100% of the vote. So they've been around forever. They're allowed by the New York Stock Exchange, the NASDAQ, Hong Kong Stock Exchange just moved to allow them. Singapore moved the day after, because there are real costs associated with single class shares. And those costs are short-termism, i.e. you've got to make the next quarter, and if you don't, you die, and activism, i.e. somebody will try to pick you off if you don't make the next quarter. Last year in the United States alone, in their markets, there were over 500 activist campaigns against companies who were slipping down their peer comparison tables. 500. And that's been the average for the last decade. So if you want your management team to be completely consumed with making the next quarter and fending off the activists, you're not going to have a chance to grow the business. And that's what you want your management teams to do, is grow the business. So you try to insulate them from these twin pandemics with no vaccines. There's no way around it. You're going to be subject to short-termism, subject to activism, the minute you go public with widely held shares and no dual votes. So you insulate your management team from those two twin pandemics by putting in a dual class share structure. Arguably the best venture capital firm in the world, Andreessen Horowitz. Mark Andreessen, the founder, said at a Stanford Business School conference, hey, if we ever took a company public, of course we'd bring it public with dual class shares. It was like, get a life. I want my management team to be building the company, thinking about the future, not thinking about the next quarter, and not prone to being attacked by one of the 600 different companies out there who are prowling around looking to take them down. So dual class shares are a really important way to insulate your company, your management team, and allow you to focus more on the long term. And therefore, it's not so simple as to say one person, one vote, because that's not the way shareholder democracy works anyhow. If I have 10,000 shares, I get 10,000 votes. So who are we empowering by allowing one share, one vote? We're empowering the big institution. BlackRock controls 20% of every company in the New York Stock Exchange and NASDAQ listings. That's huge. Why do I want the head of BlackRock to outvote me? So dual class shares, there is a positive side to them, and that's the insulation from the twin pandemics of short-termism and activism.